Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Mr. Stenziano, doing good. How are you?
I'm always making it happen, but I want to know about that pirate ship yesterday.
Bro,
what were you doing on a pirate ship, man?
We're out there on a pirate ship, got two ships going next to each other, and I'm saying to myself, this would never happen in the Hudson River, New York, bro. Never happened in New York. Got cannons going off in the
Maybe
middle
in the
of St.
1700s.
Bro, it was awesome. We had a great day yesterday. Yeah, it was great. No, it was awesome. I love Florida. Florida is not New York. That's all I got to say. All you New Yorkers, if you guys knew how great it was down here, you'd all be coming down.
We got a Florida recruiter in the house. All right. Before we get started, got to give a quick shout out to our sponsor, CrowdStreet, who knows you don't have to know a guy to find a quality commercial real estate investment opportunity. Learn more at crowdstreet.com/wheelbarrow. And for visiting their site, they're going to give you a free gift, so check them out. Today's guest is Tim Milazzo. Tim is the founder and CEO of Stacksource. Stacksource is an online platform for commercial real estate loans based out of New York City. Gino, I think we're going to get our finance right on today. What do you think?
That's right. The third leg of the framework, bro.
I think so. So without further ado, Tim, welcome to the show.
Hey, thanks, guys. Great to be on.
Hey, pleasure to have you here. Tell us about your real estate background and how you got started. And I guess this is real estate tech, right? What are we calling this?
Absolutely. And, I'm up in New York.
Yep.
Very happy that the Yankees are still alive. The Jets have won a couple of games.
What, the Jets? We're talking about the Bills today, man. Bills, baby. Come on. AFC East.
Yeah. Not coming down to Florida. It's just fine up here. It's actually 80 and sunny in New York today. We're actually just kicking off Real Estate Tech Week. So it's a week of events. From the MIPIM Prop Tech Summit, which we competed in their startup contest last year. There's a couple of meetup groups. There's a blockchain technology conference. There's a lot going on in New York this week, and there's a lot going on with real estate tech in general.
So why don't you tell us about how you got into the space? What did you do prior to getting into real estate, and just how did you get into the space itself?
Yeah, absolutely. So I grew up in New Jersey. My dad was a leasing broker here in Manhattan. And so I grew up around real estate stories, crazy landlords and tenants and leases and negotiations. I interned in real estate myself for a big real estate services company here in New York, studied finance in college, but I've always been a technologist at heart. So I actually got my first job offer out of college from Google, and I jumped at it. And I worked in advertising technology for a few years, learning the way that the world of advertising was turning on its head with automatic bidding processes and a lot of technology platforms behind the scenes of what's happening on web pages. But I got reacquainted with real estate a couple of years ago through the tech angle. I had a couple of friends that kind of poked into real estate tech and fintech, financial technology, learned from a couple of founders of companies, and realized that there's a big opportunity in those two things coming together into real estate fintech. So we're a real estate financial technology platform. Stacksource was started in a coffee shop between me and a software engineer who was a friend of mine from Google. We recognized the opportunity to make the process of getting a commercial real estate loan a little bit less painful and actually bring that online. I love, Jake, that you mentioned you don't have to know a guy to get an investment for CrowdStreet. And now Stacksource is being that platform for you don't have to know a guy to get a commercial real estate loan.
Synergy, baby. Synergy.
Yeah.
It's awesome.
Absolutely.
So, how long ago did you start the company? And I guess what was your vision for continuing the process?
Yeah. Well, so about 2 years ago in 2015, I was still working in advertising technology. I was actually at Facebook at the time. And I got acquainted with real estate tech, but I also started digging into real estate finance and what was going on. It was a time of change for real estate finance. There's a lot more non-bank lenders now than there ever have been.
Mm-hmm.
There's a lot more real estate data available now that there ever has been. And who is lending in what city and what types of deals are available is more complex than it's ever been. So a couple of years ago, we were exploring this real estate finance space. I was working on kind of a prototype technology platform on nights and weekends while I was still working another job. We started the company out of a coffee shop in Hoboken, New Jersey.
Hoboken. Oh man, I've got some
Yeah,
memories from Hoboken back in the day.
absolutely.
Sorry, carry on.
Yeah, it's a little sports bar town, but a great place overlooking the city for a couple of young entrepreneurs to kind of put our heads together and see, is there something that we can do here? Our very first idea for the company was, okay, well, there's a lot of new types of capital available for commercial real estate. Can we bring a website together? Can we bring a platform together to give you access to many lenders at once and basically apply to all of these lenders? All of those lenders come back and give you, hey, we can do it or we can't. Here's the terms we can do it at. And just a simple way to compare that. That idea has stayed strong for the last couple of years. We tried to go out to market first through mortgage brokers, just as a software platform. Hey guys, use this with your borrowers. Give them a little bit more of a transparent process. Give them a dashboard for updating where they're at with multiple lenders. We decided in 2017 to take that in house and manage that marketplace ourselves. So now we're serving borrowers directly. We're hooked up directly with lenders at the database, and your requests go directly out to lenders. And we've started hiring up the services in house to help you with those loans.
So let's dive into this a little bit. You got all these different guys lending on multifamily. So I come to you and I say, hey, I need a loan. I got a purchase price of $5 million, right? These are the things I'm looking for, or these are my parameters, and you send it out and you try to fit it with the correct, community bank or agency debt or mortgage broker. Who are you sending it out to, and what are the opportunities in terms of the financing? Who are you going out to get financing for me?
Absolutely. So who your request goes to is going to depend a little bit on the information you put in as part of the process. So you go to stacksource.com, you click get a loan. You're going to be asked a series of questions, and those questions are going to change based on your answers to the first questions. Where is the property located? The location's key. The size of the loan request, the type of asset, multifamily. Okay, well, it's multifamily. Is it value add? Is it stabilized? You're going to be entering a lot of this information on our web platform, and we're going to try to collect as much information as we can right up front. Now, the web platform does two things. One is it's building a financing request, often known as an offering memorandum. It's building it while you enter these questions into a standardized format that all of these lenders can accept. So that's skipping, hey, let me put in an application to this lender and to that one. There's one standardized offering memorandum that catches all of that. At the same time, the platform's actually matching you to lenders that are a fit for that type of deal. So if you tell us there's a $5 million deal that you're purchasing and it's stabilized or nearly stabilized in a certain city, and here's the percent occupied and a few other questions the platform's going to ask you, it's going to whittle down a list of the best multifamily lenders for that city for that loan size. Now, that's going to include agency debt from Fannie Mae and Freddie Mac. That's going to include local and regional banks. That's going to include national banks.
How are you getting the local guys on board, though? That sounds like it'd be a lot of work.
It is a lot of work. We have a team of relationship managers here that reach out to local and regional banks as appropriate. We're constantly building that database of loan programs. We're already tracking hundreds of loan programs from different banks and non-bank lenders. And we also have a core group of lenders that will actually give you your loan on Stacksource without an additional origination fee on the Stacksource side. So in a sense, we're similar to a mortgage broker. We're going to take a fee for setting up your loan. But if we're getting paid by the lender,
they're foregoing the origination so you guys can get paid, essentially, right?
Right. So
nice.
we get a very small piece of the origination for being kind of that full service partner helping you get a loan in addition to the technology platform. But because we have a group of 35 or 40 core lenders that will pay our fees on the back end, in those scenarios, if you go with a core lender on Stacksource, you actually pay nothing at all as the borrower.
Nice.
Do you remember your first loan you made on the platform?
Oh man, it's still early days, so it was really only a few months ago. We've done loans in several states across the country already. Even though this marketplace just opened up in March 2017,
Hmm.
we have done multifamily. We've done industrial. I think we've gone as far west as California. We've gone, down to the southeast. It's still early days for us, and we're still growing this, but it's really starting to work, and we've made loans in several states. We just started hiring up on the team. So I'm not sure which was actually closed first.
Oh, come
But
on, man. You don't remember your first? Come on.
I'm gonna have to go back and check which one was the first one and get the details of that.
What problems are you looking to solve with the platform? Because we're always, as entrepreneurs, starting to go out there and trying to solve problems. So what did you envision your platform solving?
Yeah. So listen, transparency is number one. When you're
Hmm.
going out there and buying a commercial asset, you want to know what financing is available, and you don't want to jump through a lot of hoops to know that and to get it lined up. Financing is a huge reason that deals fall apart, and we want to bring a little bit more transparency to the capital markets and help you size up your loan, help you get in contact with the right lenders immediately, and not have to do a lot of cold calling around to banks and filling out multiple applications just to know. Or, I'm a guy in a suit. Trust me, I know all the right lenders. You're going to have to, what I come back with is going to be best on market. We want to show you that, have your hands on. I mean, this is 2017. You were probably walking around with an iPhone. You are probably using for your own personal life a number of dashboards, and maybe you're using some sort of fintech to keep track of your own accounts and your net worth. Why shouldn't you have tools like that? And I know you guys have great tools like that, by the way, on the analysis side through your Jake and Gino multifamily investment tools. This is an extension of that same trend into the financing process, figuring out what's available right away, who can I connect with, and how can I make it easy.
I always say it's when you're dealing with a community bank. We'll go back to the $5 million loan example. Say we just negotiate a deal. We're buying multifamily deal for $5 million. If you're going to the community bank side, that negotiation that you're going to have with the bank is going to be just as hard as the one that you had with the seller. And it's like, man, you're beating your head trying to get a deal done with a seller, and then you got to turn right around and go through the same crap with the community bank. If you can
Right.
kind of level and say, guys, these are the terms we're looking for. Let's just go submit them, and the best one wins, right? I like that idea because I think it'll accelerate the process, and it'll just kind of avoid some of that unnecessary back and forth.
Yeah, absolutely. And you want to compare your loan offers apples to apples.
Yep.
Another thing, the applications themselves are different, and the process is going to be different with different community banks and regional banks. But even the term sheets you get back, I mean, they're going to have the major points on them with the rate, the amortization, the prepayment penalty. But Stacksource helps you line those things up immediately with a loan comparison view.
Nice.
So you can see, okay, well, I'm getting a better rate over here, but I'm getting amortization that's better over here. What's my monthly payment going to be on that? Don't pull out a calculator. Don't pull out an Excel spreadsheet. It's all going to be there for you. Based on my estimated net operating income, here's my cash flow with this loan versus that one. Here's my IRR on this loan versus that one. So we're not a full-fledged analysis tool for figuring out your net operating income or how much capex you have to put into a building. But if you have those things soft circled and you understand the type of investment you're getting into, we can figure out the financing stuff for you. So apples to apples, easily view and analyze those things. We are a technology platform, so we're all about the tools as well as the service.
So how else? I mean, let me jump back real quick to anyone listening to the podcast. We have that bank term sheet that Tim is referring to. It's basically the 12 or 15 parameters you're looking for, whether it's guarantors, whether it's term, interest rate. We have a sheet. So if you guys want it, just email me, Gino, jakeandgino.com, and I'll send it out to you.
Guy just keeps on giving. Gino the
bro,
giver, man. He just keeps on giving.
Bro, you got 6 kids, you just keep giving. You know what I'm saying? It's ingrained in you after a while. You know what I'm saying? They suck the life out of you. But anyway, not to divert that, not to go off topic. Tim, I always tell Jake and the Jake and Gino community that money has become a commodity. I mean, basically, it's unfortunate, but banks are not like they were 20 years ago where you'd walk in, you have to be petrified. How else are you not commoditizing your business? Because you could fall into the commodity thing where it's just all about pricing. What other services do you think you bring to the table for your people?
Yeah, for sure. So the tools and the analysis is definitely part of it. Being able to plug in loan offers and see the differences between them. But we're also bringing a level of service on top of the technology. So we've got some experts in house that act as capital advisors on your deal. As you request a loan, you go through the process, and we have people that have closed lots of commercial real estate loans. We know what points are negotiable with the lenders and what are not, and we can act as that full service partner. You should go in as an investor knowing as much about that as possible. But then there may be a connection with a lender that we're able to make, and we know what other deals that lender is closing. We have some data on the back end that may suggest, hey, we may be able to get a 25-year amortization out of this guy, but and instead of the 20 that he initially came with. So there's service on top of the technology. Definitely very tool centric, but definitely service.
What type of persona or avatar are you looking for as far as the investor? Do you want the experienced investor? Do you want the beginning investor? Who would you like to target?
Yeah, so we've got different capital sources for everybody, right? So if you're working on your first deal and you're not even sure that gets up into a Freddie Mac small balance program, which needs a minimum of $1 million loan, you're going to get hooked up with, local regional banks, people that are good capital sources for small balance, whether you need a bridge loan or a stabilized. If you're coming with, a $20 million deal, you're going to get hooked up with very different lenders. Then we're going to be able to introduce you on the CMBS side and the larger agency side and larger national banks. So the capital sources are going to be very different. The process is going to be very similar. We think that the process for financing real estate, the term sheets themselves are very similar. There's going to be an amortization and a rate, and there's certainly for larger deals, there's going to be some more customization. But the base of financing commercial real estate, financing multifamily real estate, the term sheets are very similar for a $25 million loan versus, a $750,000 loan. So the process is going to be very similar. The lenders are going to be different. Things like the pricing is going to be different. But we have capital sources that would be matched to any size deal.
Quick question here. Are you doing anything with the borrowers where, say, they do 5 deals with you and they have a great performance that they become like preferred Stacksource borrowers, so that when the banks see them, they say, wow, these guys have really performed? Do you have any way of tracking that, or do you do anything like that?
It's a great question. So part of the digital offering memorandum that we send out to the lenders has a sponsor profile that's attached to it. So that's trying to showcase the track record, other loan performance, net worth and credit score, and a few other things that lenders are going to want to see to speed up that process and to give them a lot of trust to put a term sheet together. So no, we don't have any preferred Stacksource borrower status, because even if it's your first time on Stacksource, but you've got a great track record elsewhere with other lenders, we're going to want to showcase that for you, and we're going to put together a sponsor profile that reflects that strength. So good idea. We have, we're still in early days on the technology platform. We don't have anything like that right now.
That one's a freebie. That's on the house.
Yeah.
Wow, look who's being generous now, bro, huh? It rubs off, you know what I'm saying? I guess I'm a good influence on Jake in that respect.
This is true.
Listen, how are you growing the platform? I mean, Jake and I, when we started out with Jake and Gino, we were just two guys with a podcast and a video and microphone, and we still don't have our mission and purpose. I always talk about the M&P. What is your mission and purpose, and how do you envision growing the company?
Yeah, so we want to be known as the online platform for commercial real estate loans. We want people to think, hey, I need financing for this commercial asset. I don't know where it's coming from. Stacksource be the first place to check, and something that's going to be a trusted process that borrowers are going to keep coming back. Now, when we did close our first couple of loans earlier this year, it was me and 2 software engineers, and I'm not someone with 25 years experience in commercial real estate financing. Now, we did have some great advisors. Head of real estate investment banking for a major bank, a commercial mortgage broker with 25 years experience, and we had some great advisors. But as directly on the team, it was me and a couple other technology guys figured out a way to make this happen. We got some lenders on board. We got some deal flow going. We are now starting to build up that team where we have a couple of expert capital advisors on board. One was from a CMBS lender. One was from a larger mortgage brokerage company. And we're still looking to grow the team. So we actually have a few positions open now for people that are loan originators, people that would be great capital advisors to other borrowers going through the process. people to continue to design and build our platform. So I think that the size of the team hopefully is double this time next year from 5 to 10. But getting our name out there is the biggest thing. Marketing, letting people know this is available, that it works, that you can skip a lot of the manual headaches of the financing process now in 2017 and into 2018. So the biggest piece of us growing will be growing the team, growing our presence in the marketplace, letting people know it's there, and continuing to refine the product. We love product feedback. Love the ideas that you guys have for the platform. And, a lot of the growth of the technology itself will come from feedback from borrowers and lenders using our platform.
Do you see yourself working with crowdfunding platforms? I mean, and have you actually looked at any other competitors? Because I really haven't seen any type of competition in the market for this type of platform. So have you looked into that also?
Yeah. So it's very early for online platforms for financing in commercial real estate. Now, this exists like in full measure in some other loan verticals outside of multifamily investing. Residential real estate for sure. I mean, LendingTree was launched in the 90s. But if you think about car loans, if you think about small business loans with platforms like Lendio or Fundera, this is definitely a well-trodden path for other types of loans. It's early days for commercial real estate, and we're trying to make the market more aware of this. We do have a couple of crowdfunding portals that are lenders on our platform, and they are generally matched on kind of bridge lending scenarios, sometimes mezzanine lending scenarios. There's not really any crowdfunding portals out there that are kind of long-term stabilized type capital. They're a little bit more expensive than that because the investors want a good return on the other side. So we'll match to crowdfunding portals on like a bridge opportunity.
Have you ever, I think we talked offline a few weeks ago, consider working with real estate agents to bring loans to you or to connect you with other investors?
100%. And if you're a commercial real estate agent out there and you're helping people buy multifamily assets, we'd love for you to refer business to Stacksource. And as a matter of fact, we have a referral program where we're able to help you share in the upside of that. So at some major commercial real estate brokerage companies that have both investment sales and financing in-house, that's kind of something that naturally happens is the investment sales guy goes to the financing guys down the hall and says, hey, who can do this for me? Who's going to cut me in? So for Stacksource, we're making that official. And we're saying, if you're an investment sales broker, you're helping people buy, we'll cut you into the financing process and the percent of origination that we make.
Everybody's eating, huh, Gino?
Yeah, it's great. I mean, I'm trying to think of it from the investor standpoint, like how the investor would go on, and because it's really hard to crack through. LendingTree, you're right. I wonder why this hasn't tried. I mean, why do you think this hasn't become more?
It's a mysterious world out there, Gino. Everyone's like, how do I get this finance? And I got to go knock on the bank. How do I get the guy behind the teller? When you go to these community banks, or it's like, where are these brokers at? It's a mysterious world, and you got to get connected and meet people. So this kind of takes all that mystery out of it and levels the playing field. That's what I like about it. So sorry, carry on with your question, Gino.
No, just one day. But why don't you think it hasn't been more prevalent in commercial financing? I mean, because like you said, even Quicken Loans and all this, is it more cookie cutter for residential and commercial is a little more complicated? Is that the reason why, or what do you think?
I definitely think that's a big driving factor. I mean, a residential loan is based on basically down to an algorithm these days. You've got a credit score, you've got a bank account, you've got some prepayment or some payment history on some of your credit balances. There are platforms out there now on the residential side that are making that process so automatic because it's a consumer loan. It's not overly huge. I mean, a commercial real estate loan, a multifamily loan could be $100 million. That's something that's very difficult for a lender to automate. And you're not talking about a consumer where you just look at a score and there's kind of an algorithmic score and you got 3 scores and you can figure most of it out that way. Every multifamily asset is a business. And that's why a lot of mortgage brokers call themselves investment bankers. They're trying to find financing for a business. I mean, you've got tenants, you've got maintenance, you've got property management. You're talking about every asset being its own business. So you're financing a business, not a person. So it's definitely less cookie cutter. Believe it or not, there are actually a couple of commercial real estate financing tech platforms that rose up in about 2000, 2001, 2002. But that was around the .com bubble. And there were a lot of kind of inflated valuations, people trying to build big tech companies from scratch in 6 months and have 100 employees. And a couple of those kind of busted in the .com bubble. And we haven't seen another wave of trying to do this in the new technology era in a while. And now building technology and building a technology company is very different in 2017 than it was in 2001. And not only that, but commercial real estate is very different as well. I mentioned the availability of data. It's not only the lender in your backyard that can lend to you anymore. And that's something that you need to know, and that's something that we can help you take advantage of. One of the biggest construction lenders in New York City right now is Bank of the Ozarks. Why is that? Because they have a bunch of data and they understand real estate in areas where they wouldn't naturally be 20 years ago. There's a lot of cross geography lending. There's even Bank of China coming in and lending on a lot of assets in New York here. I think there's a lot more lenders than there's ever been. So there's a lot more opportunity to take advantage of alternative sources of capital. And if you're doing a larger commercial deal, you should know about that.
It's interesting.
Jake, I was just thinking maybe it's also a part that we're entrenched in it, and these commercial brokers make so much money in a deal that it's hard to break. I wouldn't say call it a monopoly, but can you imagine this platform comes online, you have all these platforms, and you have guys in their 30s and 40s making 50 or 60,000 on a loan, and all of a sudden it goes online. It's like they're losing their money, and it's happened in every single space. Whether you're a travel agent, whether you're selling airline tickets, it's just sooner or later everything's going to go online, and us older guys, if we don't, I guess, start converging and start getting on that ship, we're going to get left behind, right, Jake?
Hey, man, I'm not an older guy yet, Gino. Come on now.
You'll be there before you know it, bro. Let me tell you something. But seriously, Tim, I really think that's part of it. I think part of it is that no one's come on and said, let me take this risk and I don't want to say the good old boy network, but I mean, some of these loans, they're making a lot of money, and you know what, to do one or two, but actually to get, I would say, the Jeff Bezos of the online commercial, there's a lot of money to be made in this. Where do you see your company in the next 3 years and the next 5 years? Where do you see yourself going?
Yeah, great point. So there are, as of the latest rankings by National Real Estate Investor, 25 companies across the country that set up $1 billion or more of commercial loans per year. 0 of those 25 are technology companies. That just smells like disruption, even if I didn't know anything else about the space. Mm-hmm. So I think in the next 3 to 5 years, you're going to see multiple technology companies like ours cracking into the top 25, cracking into the top 10 as far as dollar value of commercial real estate loans set up. And I think there's going to start to be disruption. There's going to start to be consolidation. I think the driver of that is going to be borrowers' expectations changing. If you can use a technology platform to analyze your deal, and you have an online listings platform that you found the deal, and you are using a variety of technology platforms to manage your property and keep track of your portfolio, why not your financing too? And now you get a taste of doing your financing through an online process. It was easier. It was more transparent. It was quicker. And the borrowers talk to each other. I mean, commercial real estate investors talk. It is very much a relationship business.
Here's who this is going to help the most. The guys that are borrowing less than $2 million. I see the kind of term sheets that these guys get. 15, 20-year AMs, 6% rates, and they take it because they don't know any better. When these guys can get out there and start getting online and realize that they're getting hammered and the bank is basically raping them, then because right now those aren't commercial terms, right? But they're getting that, and so these community banks are going out and taking this, these really just this is not the market right now, right? These should be rates in the 4s, 25-year AMs, but they're not getting them. So if they can go out and compete and let more of the market compete for their business, those terms are going to get better for those guys.
And Jake, it's funny you say that, 'cause that's where we started out with. We started out with 20-year AMs.
They're punching us in the gut, laughing at us. Ha 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 ha.
Yeah,
Take this.
And that's the problem. There was no transparency with it. So I think the 3 to 5 year thing, like you said, with the disruption, it's going to happen so fast, and these guys aren't going to know what the heck happened. They're going to be like, "What's going on?" And it's just, I'm telling you, it's going to really be awesome to see, because I can see from CrowdStreet what they're doing and that crowdfunding platform. Guys who are raising capital, the way you raise capital nowadays, as opposed to 3 years ago, is completely different. And 3 years from now, it's going to be like, wow. So, I mean, everyone listening to this podcast, you better say, I either better be part of it and embrace it, or you know what, I better get out of the space and not even.
And ultimately, it's benefiting the consumers. Right?
That's what exactly. Yeah. Yes.
Yeah.
That's what I'm saying. So 5 years from now, where do you see yourself 5 years from now?
Yeah, well, I hope to be one of those companies that's breaking into, the commercial real estate loan market. As far as the dollar value and the number of loans that we're doing, I hope to get on some of those lists of, those companies setting up the most in commercial mortgage volume. And then there's more to financing than just setting up your loan. There's the servicing process is something that we know, especially on the CMBS commercial mortgage-backed security side, can be painful as far as reporting back to your bank and knowing what payments are due and when your triggers are for your cash management.
Oh, so you can have a software portal to manage that? Is that what I hear coming down?
I think somebody's going to do it.
Nice.
And we're definitely focusing on commercial loan origination. We have to do a great job of that in the next 3 to 5 years. If nobody solves that problem in the next few years, I think that's another pain point that's ripe for disruption. There's kind of buying and selling loans behind the scenes as well. So there's some other things that we, would be looking to do. But right now we want to do one thing. You got to
get the origination piece right. Make sure you're nailing it.
We want to do one thing. I get it. Really. Yep. We want to take care of our borrowers and make sure they're getting the best loan and the best loan experience that we can build.
Makes sense.
Who else is on the Stacksource team?
Yeah, so I've got a co-founder and CTO, Nathan, who was a software engineer at Google that I convinced to take this crazy venture with me. We've actually both got 2 kids, so we're not your typical kind of 25-year-old entrepreneurs that are living in a van and kind of eating ramen. We've got some families to take care of, so we need to make this successful for sure. But he's the genius. He's the brains behind the technology. He's the person that leads all our coding and our technology building. He's got one more engineer on his team named Andrew, who's a rock star. We do have 2 capital advisors, one that joined from Marcus and Millichap, one that joined from the CMBS lender. That's the whole full-time team, but we've got some great advisors as well. And I mentioned we're hiring. So if you're someone that's a traditional mortgage broker listening to this podcast, and that disruption's coming and you want to be a part of it, maybe reach out and maybe you could be a part of the Stacksource team.
Let me ask you one last question for me. What for you is your best, tip for the listeners as far as the finance right portion goes?
Don't take your first term sheet that you get because that's how much work you wanted to put in. So you should be looking hard, and you should be looking based on your deal and really measuring what the best financing is for your deal. So, and it's not all about rate. You have to look at amortization. You have to look at prepayment penalties. You have to understand how this jives or doesn't jive with your investment strategy. So we're trying to make that easier, but you have to understand the basics of it first and how those things affect your deal. So don't just take the first thing because it's the first thing and it's easy. Make sure you get the right financing for your deal because you're going to be stuck with it for a while.
And it's gonna really impact your cash flow. And look for banks, especially if you go on the community side, that are trying to grow, that are hungry for the business, because you're going to get better terms out of them. Don't go for the big regional guys because a lot of times it's going to be okay. I mean, sometimes you can do all right. We've seen some term sheets from these guys that are okay. But if you're really trying to get aggressive, it's a lot of times those smaller banks that are hungry for the business, that are trying to grow, that are going to give the best terms.
Mm-hmm.
Yeah.
So we got another little fintech piece to this show. Before we get to the short answer section, we're gonna give a little plug for our buddies over at CrowdStreet. Just started using them, and CrowdStreet believes that all investors of all sizes should have access to quality commercial real estate investment opportunities. The CrowdStreet marketplace features vetted commercial real estate investment offerings from over 100 sponsors from across the U.S. Download a free copy of their commercial real estate investment guide at crowdstreet.com/wheelbarrow. And that's the free gift they're giving out. And CrowdStreet's another company that we think is great, and they're doing really good things. And it was interesting that you brought up the software, because they have their marketplace, but then they also have a management software section where they're helping the investors manage their investors and share documents. So they're doing something really cool. So that sounds like a great dovetail for you guys if you get this origination piece figured out, that you can move on to, similar to what we were talking about there. So I love to ask everybody what their best habit for success is, because you're a young guy, you're juggling a family, you're entrepreneur starting this up. What is something that you do on a daily or weekly basis that enables you to do so much?
Oh, geez. I mean, it hasn't been easy. Persistence is definitely a key. We've had ups and downs, just in the couple of years since we've started this out, and we've had to push through some difficult seasons. Realize that nothing is an overnight success. When you see somebody's success, there's a lot of hard work that went on, behind the curtain. Getting great advisors and people and mentors that you can trust is another important thing. Whether you're a commercial real estate investor or a tech company or anybody, there's a lot of wisdom out there, and you got to make sure that you're hooking up with people that have gone before you. On a weekly basis, we do a stand up with the team and just talk about what's working and what's not working, what we're trying to accomplish for that week. Goal setting week by week is really important too. What are we trying to get to, and what are the things that we can do this week to try to accomplish those goals? So that's something that we do at the beginning of every week for our company, is just try to level set. How was last week? What did we do? What are we trying to accomplish this week? And then checking in on those things. So that brings some goals, some accountability. That's something that helps keep us on track.
Gino, he just said he's got a cadence of accountability. What do you think about that?
Did you guys talk on the phone before?
Just kidding. What would a business or book that you could recommend to the listeners that would make an impact on their lives and maybe their business dealings?
Sure. So as a matter of fact, I'll hop back a few years. I had a manager at Google, and I was in my first ever sales role. I was in an operations role at Google, and then I was in a sales role. Whether you're in a sales role directly or not, all of life and all of business is kind of dealing with other people, and trying to get the best results and decisions out of other people. And sales, that's a full-time job, but you have to be able to do that no matter where you are. If you're an investor, negotiating the best deal, trying to get the best people around you. I wasn't very good at sales in my early days. And this manager recognized that I needed a little bit of help to get on track, and handed me How to Win Friends and Influence People. And it's just a book. It's an older book about, sales and negotiation, but that's kind of the key, is making people your friends and getting them on your side. And that's the way you influence people and their decisions and their behavior. So that one is one that I definitely recommend, definitely for people in a sales or negotiation type role, but just a general life skill. And I would also say, just pay attention to the things around you and the technology scene, because a lot of things are undergoing disruption. So there's a lot of good books, that I can recommend, whether it's Platform Revolution and understanding how businesses are changing. Originals is another good book that I was given to by a friend recently.
So How to Win Friends and Influence People, Gino. We don't know about these tech books, but open your ears, listen, ask questions about someone else, be truly interested in what they're saying, and try to be present. What do you say, Mr. Barbaro?
Is that a Dale Carnegie book?
Yes.
It's I've read the book a long time ago, but they're basically all the same. All the gurus today talk about it, and it really is. Jake and I are going to do podcast with a guy named Chris Voss, which is Never Split the Difference. And the first thing in negotiation is really 80% listening and 20% speaking. So I think that's the most important thing. And what your platform is trying to do, and any entrepreneur is trying to do, is just solve a problem. The more problems you can solve, the more money you're going to make, and the more people you can serve. To make millions, you have to serve millions. So that's what it comes down to. And I think it's spot on.
Gino Barbaro, everybody. What project are you excited about right now?
Oh man, so there's a lot of things going on in real estate tech. If I can use that as an answer, people making the analysis of real estate really easy, and making the leasing and all of these processes. There's a lot of good entrepreneurs working on different technology projects in the fintech arena. We went through an accelerator program last year, and there's some people solving cool problems for independent contractors and residential mortgage. So there's a lot of technology that I follow. I'm on a lot of technology mailing lists. So I'm probably maybe the biggest nerd that you've ever had on this podcast. I love new technology projects. I don't know if that
Gino, he hasn't listened to very many of our shows.
Does that mean real estate projects?
No, I meant we have a lot of nerds on the show.
Oh, gotcha.
So, okay, so you got me. My name's Jake. I'm from Lake of the Ozarks, and I'm in mortgage lending, right? And you said, "Hey, man, reach out to me, get a hold of me." How do I get a hold of you? You want to hire me? Come on, man. How do I get a hold of you?
So Stacksource.com. I'm Tim at Stacksource.com is my direct email address. And that's the best way to start. I'm also on LinkedIn. Feel free to reach out. Stacksource.com also has a contact page if you can't remember anything else.
So Stacksource.com, if you guys are a mortgage broker and you're ready for the job, hook it up, right?
Absolutely.
Gino, what else is going on out there today?
Got a live event coming up in a couple of weeks, November 11th and 12th. That's coming up real fast. I mean, other than that, I think it's a really cool platform. I think it's a really cool idea. I'm really surprised that someone hasn't thought about this sooner because, I mean, loans are they're just booming right now. The whole market is booming. And I guess one last question that I wanted to ask and I forgot to ask was, what do you see happening when, I'm not saying if, when there's a correction in commercial real estate? Do you see that impacting you, and how have you, I guess, preparing for that?
Yeah. Well, so we're starting from zero. So anything that we're building is growth for us. And then there's commercial real estate loans that happen in any market. And there's definitely, kind of bigger companies that might come in and buy distressed assets from smaller investors if smaller investors weren't listening to the Multifamily podcast and weren't taking the right steps and financing things right. If they get distressed, there's going to be people buying out those assets. But there's definitely, listen, everything is a cycle. If it goes down, it's going to come back. There's going to be commercial real estate loans all the way through, maybe less construction, maybe different types of loans. But it's going to go up and down, and that's going to continue. So we're trying to build our company for the long haul.
Good. Okay.
Let's hit it one more time. I am a multifamily investor. I need a $3 million loan. What do I do right now?
Yeah. Stacksource.com. Click Get a Loan. You enter some information on our platform, and then our team will be in contact with you about every step of the way.
So easy that Jake and Gino could do it. Hey, man, this has been a lot of fun. Tim, thank you so much for your time. Have a good rest of the day.
Thanks, Tim. It's been great. Appreciate it.
Yep.
We trust that you enjoyed the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.